This week, it's one of my favorite segments. It's time for our quarterly security money update. How'd the Security Weekly 25 Index fare during the pandemic? The answer might surprise you. In the leadership and communications section, I'm a CISO. What's next? The upside of virtual board meetings, the new cybersecurity priorities of 2020, and more. Business Security Weekly starts now.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly. Most breaches are caused by exploiting oversights in basic cybersecurity fundamentals, but complex hybrid multi-cloud infrastructures make cybersecurity hygiene challenging. Red Seal can help. It shows you what's on your network, how it's connected, and the associated risk across public cloud, private cloud, and physical environments. With Red Seal, you'll get control of your cybersecurity fundamentals so you can protect your organization from the inevitable attack vectors and reduce your cyber risk. For more information, visit securityweekly.com/Red Seal.
Welcome to Business Security Weekly. This is episode number 180, recorded July 13th, 2020. I am your host, Matt Alderman, here in Colorado. Joining me from G-Unit Studios in Rhode Island is my co-host, Mr. Paul Asadorian.
Thanks, Matt. It's good to be here. I wish we could sample music without getting in trouble from the copyright police, because I'm torn between like living in the city, money, 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 and Pink Floyd, like money. It's the best I can do, short of having to be able the ability to play the sample without getting sued or takedown notice.
Right. Yeah, we don't need any lawsuits, that's for sure. And unfortunately, Jason can't join us today. I have some great articles in here I wanted his thoughts on, but he got pulled into a customer meeting, so just the two of us. We are looking for high-quality guest suggestions for all of our podcasts to fill our Q3 recording schedule. Submit your suggestions for guests by visiting securityweekly.com/guests and completing the form. We just reviewed them. We'll review them in a couple weeks, and once you get approved, Sam will reach out to get something coordinated. Also, register for our upcoming webcast or virtual trainings by visiting securityweekly.com/webcast or visit securityweekly.com/on-demand to view our previously recorded webcasts. All right, this is one of my favorite segments. I love updating kind of where we are from a market perspective. I spend a lot of time preparing for this segment because I literally go out to all the earnings reports. I go to the analyst ratings. I put everything into a big spreadsheet, and I try to summarize it for all of you on how's the security industry doing. Paul, you missed last quarter, and last quarter was right after the pandemic had started, right? We saw a huge drop in the market in late March. It recovered a little bit in early April when we did the segment 3 months ago. And what I thought was interesting is to look at that 3-month time window, because there's been some very interesting things that have happened in that time frame. The first one is we didn't make any changes to the index. I thought I was going to have to, because remember, Forescout was in the middle of getting acquired, but as we all know, that deal fell through. So I didn't have to make actually any changes to the index itself, which made my prep time a little easier this quarter.
So Forescout's still public, as in not
Correct.
acquired. Gotcha.
Yeah, because there was a deal to take them back private. And if they came out of the public market, then I would have had to replace them with another security company. I know who I would replace them with, but they didn't come out because that entire deal structure fell through. We'll get into some of the results here in a second on why. But yeah, I didn't have to make any changes, which was good. Now, here's the interesting part. So on Friday, the 10th of July, both indexes closed at record highs. Both the NASDAQ closed at 10,617.44. That's a 60% increase in when I started the index. So when I started the index, this is almost 2 years ago now, Paul, I baselined our index and the NASDAQ. And so I've been tracking them ever since. So as of last Friday, the NASDAQ's up 60% from when we started the index, which I thought was interesting. I mean, the NASDAQ's been on this huge roll lately. There's been a lot of records, and it closed at a record high on Friday, and it will close at the rate it's going today at a record high as well today. What was interesting, though, is the Security Weekly 25 Index also closed at a record high on Friday at 1437.23. So that's a 43.72% increase since I created the index almost 2 years ago. So what I think is surprising is even though we're in the middle of this pandemic, both the NASDAQ and the security companies that are publicly held have actually had one heck of a rally the past 3 months.
That's really interesting, given the times.
Yeah. Yes, exactly. You would think, wait, everything would be suppressed, but there's been actually some really good financial results from the security companies. And when I look at the earnings reports, what was announced in Q2 for the Q1. Now remember, Q1 was mostly in the books before the pandemic hit, because that was March, right? And it was kind of the like mid to end of March. So most of the Q1 results were in.
Yeah. Yep.
Pretty close, right? Which means those announcements that came out of the earnings reports, what I think will be interesting is we're starting to enter earnings season again for these companies. So over the next month to 2 months, we will see how they did in Q2. And the question will be, when we do this again in October, where will the index be compared to where it is now? Yeah, pretty interesting. So just some quick summary numbers. Revenue beat on average by 1.31%. Okay, it's not too bad. But earnings beat 55.4% earnings beat on average across the top 25 pure play cybersecurity companies. And so earnings is interesting because a lot of the companies that are in the index have gone IPO recently and have had negative earnings, which means they're still not profitable. And as you see earnings beat by these kind of numbers, what you're starting to see, I think, a little bit is the shift from negative earnings eventually into positive earnings and putting these companies back into profitability, which some of these companies I think need to do.
Is that typical, like
viable.
Post IPO to not meet earnings and then kind of come out of that? Is there like reasons for that, or?
Yeah, so what you'll typically see before a company goes IPO is a lot of investment in driving top line revenue growth. And sometimes that's done in lieu of earnings, which means they're not profitable when they go IPO. Typically, the rule of thumb is when you go public, you have 12 to 18 months to show that progression towards profitability, which means you want to stop burning cash. You want to start moving towards positive earnings as part of your continued growth. In our space, I've seen over 24 months. You take Tenable, for example, which we know near and dear to our heart. They're still not profitable, and they've been on the public market now for a couple years. So they've had a longer runway than the rule of thumb, which is usually that 12 to 18 month timeline.
Gotcha.
Yeah, so they kind of vary across the board. Analyst ratings, the average analyst rating went up. It's still a weaker buy signal. It kind of sits in between a buy and a hold signal. So there's still some bullishness in the overall market across the board. The best rated stocks right now are Verint and Rapid7, followed by Varonis, which Verint and Rapid7 have been on. They were on this list last quarter as some of the best rated stocks.
And that's because of probably steady growth rather than CrowdStrike, which I feel like did that kind of like amazing growth rate in stock price. Anyhow, I haven't looked at the other numbers that support it, but that probably impacts the rating, I would imagine.
Yeah, it looks at where the stock currently is, what they think the longevity. They look at history, but they also look at the potential of these stocks, right? Verint was pretty beat up over the previous few quarters. And so the stock price had really fallen. So analysts look at it in its beat up form and say, well, I think it's a good buy now because of the price point it's at.
Because it's going to go. It can only go up from there. It's not. They're not going to take any more beatings. If they do, they're in big trouble, right?
At least you hope so, yes. Where Rapid7 has had very good, strong numbers the last few quarters, gaining momentum. And I'll get into some specifics in a little bit, because last quarter I looked at some of the stocks that had a potential strong upside, and I made some recommendations. And now the interesting part is I actually measured where they are 90 days later. There's some interesting numbers in there. We'll get to that in a minute. The worst rated stock, SecureWorks, again, there's something about the MSSP market that the analysts don't like. I think it has to do a little bit with the amount of services that are in the mix compared to product.
Agreed.
And that the growth mix in a service-based company doesn't give you the same valuation. And so the analysts are they've been turned off by SecureWorks for a number of quarters. SecureWorks actually did pretty well. They actually beat on both top line and earnings, but the analysts just don't rate that stock very well. NetScout and Checkpoint are on the worst rated list, and NetScout had a major miss, which is why the whole acquisition deal kind of fell through with NetScout, and their stock has been very suppressed. But and the analysts have really rated that stock.
Yeah,
definitely. Some of the best performers last quarter, SailPoint and then CrowdStrike. Both of those companies have done really, really well in exceeding expectations from the analysts. SailPoint and CrowdStrike have been on the best performers list multiple quarters that I've been tracking them. Those are very, very solid companies right now in the space.
There's a question from the chat, Matt. So the InfoSec company is a good investment, at least as a whole, right, versus the NASDAQ as a whole, or security companies being a basket, as he terms, or a subset of NASDAQ, right?
Yeah, I mean, the NASDAQ has still performed better overall than the security companies. 60% growth versus 43% growth. So the NASDAQ is still growing better. There are companies, I think, within the security area that are really, really good performers. And I'll highlight those here in a little bit when I talked about some of the upside. There are some stocks that have performed extremely well over the past 90 days, even maybe better than the NASDAQ as a whole. So I still think the security specialty within the NASDAQ still doesn't have the same growth potential as the entire NASDAQ, but there are some gems in there. Individual stocks.
That's what I've kind of gathered from doing these segments too. Yeah.
Yes. Yeah. The worst performers, Forescout and then Verint. It's one of the reasons why Verint is rated, I think, by the analysts, is that they're expecting it to perform better than it has, and it hasn't. So its price, I think its stock price is suppressed. So it's why analysts think it's still a good buy. I guess.
Unless it continues to fall.
True. Or just stay flat.
Short of having a time machine.
Yeah.
Well, there's methods. I mean, obviously people have methods for, basically predicting, right, the stock's performance.
Yeah, well, I got some great predictions. IPO-wise is pretty quiet right now. There's no planned IPOs. I mean, there's still rumors about Tanium coming out sometime this year.
Yep.
I don't know. Until the S1 gets filed, you don't know. No mergers and acquisitions because the Forescout deal fell apart. We've talked about that. So
no mergers and acquisitions in public companies.
Correct.
Well, public companies have bought privately held companies.
Correct.
Right. But a public company has not been acquired, which that takes them off of or consolidates them in if the other company is public, right?
Yeah, exactly. So when Symantec got bought, right? Symantec was acquired by Broadcom.
Right.
The old Norton LifeLock product became NLock, right? And so sometimes you'll see a public company buy another public company and they get merged in.
Yep.
In our space, the traditional path we've seen is somebody coming in and buying a public company and taking it back private, like Forescout or Veracode or some of these other deals that have happened. Imperva was another one that happened like that. So you see those periodically. And so typically I just track who's being acquired in the public space and are they going back private, or was it by another public company?
Now, what happens if you've invested in the stock of a publicly traded company and they get bought by, let's say, a private equity firm that takes them back private? What happens to your stock? You cash out, or do you have options?
Yeah. No, it typically gets
in the
cashed
literal
out.
sense, not.
Yeah, because what's going to happen, so here's what typically happens. Let's say Forescout got acquired for a premium or for whatever price, right? The stock usually goes up to that price because that's what it's worth. That's what it's going to get bought out at.
Right, yep.
Yep, you give it valued at. And then you basically sell your stock because when it rolls back in, the private equity firm is buying all that stock.
Is buying it.
Because they want to own.
So you're basically forced to cash out at that point.
Basically, yeah.
Gotcha. Okay.
Yep. Unless you're an insider, which has some different scenarios.
If you're an employee, right? Yes, you probably get an option to retain your stock, and there's probably a lot of details behind that last sentence, but we'll spare the audience, right?
Yes. You never know. Sometimes it could be a good thing. Sometimes it could be a bad thing. By the way,
I remember you and I having a lot of those conversations at Tenable about what could happen, what is happening. Yeah. Right.
Should I buy my stock? Shouldn't I buy my stock? Yes. All those fun discussions. So last quarter, I identified 7 stocks that had a really strong upside potential, all 40+% upside from where they were. Number one on the list was Mimecast, had a upside potential of a little over 69%. In 90 days, it's increased by almost 32% in the stock price.
Wow.
And it was one of my 3 picks. So if you took my advice, I didn't even take my own advice, by the way, but if you took it, that stock's up almost 32% from where it was 3 months ago. FireEye had a 68% upside. It's up 19.5%. Rapid7, almost 54% upside. They're up almost 36%. Tenable had a 48.5% upside. They're up almost 40%. SailPoint, which was one of my picks, the upside potential was 47.16%. They're up 72% in 90 days. That stock has exceeded the upside expectations. So that would have been a huge bet. That would have been a great one.
I'm going to start calling you Kramer or something.
Mad money. Yeah, mad, one way or another.
Matt's mad money.
Yep. CyberArk, 46% upside. They're up a little over 22%. And then Verint, remember, Verint had an upside of 42.94%, but they're only up 4% right now. And it's not one that I picked. I picked Mimecast at almost 32%. I picked SailPoint, which is 72%, and I picked CyberArk, which is up 22.35%. Yeah.
Awesome.
Some interesting numbers.
So the other question from the and I think you're going to address this now, right? Like how do you separate the high performers from the low performers? Is it niche management, like low debt? Like what like goes into a basic I mean, there are people who do this for a living, right? Obviously. And some are very successful. Some probably aren't, right? But there's like art and science into this calculation of like when you buy and when you sell, right?
Yeah, it gets interesting, right? There's certain criteria I look at as an individual investor. I don't own any of the security stocks in this portfolio, primarily because I like dividends. And none of the security companies really pay a dividend. I think maybe 1 or 2 pay like a really
small
1% dividend. It's super small, right? I think if somebody like a Qualys, for example, offered a dividend, I think their stock would continue to explode because Qualys has been a very steady performer when it comes to both revenue and earnings growth.
Yeah,
they've been profitable from day one. They always have growth. Yeah, maybe it's 15 to 20%, but they're consistent. And you tie that with a dividend, that would change my investment thesis.
And they seem to meet their earnings more often than not, right?
Correct. They do.
They've done a great job managing the company. I mean, to fire on all those cylinders, like you got to have a very well managed company, right?
Exactly right. And so earnings, dividend would be part of it. Looking at revenue and earnings growth would be part of it. But I like companies that are really moving towards profitability. And there's a number of companies still in the Security Weekly 25 Index that don't have that profit yet. And I don't see a path to profitability for a few of these companies. And so that would limit how much I would want to jump into one of these stocks, because if they can't hit profitability, does other growth slow down? Do they get the same valuation, et cetera? The other thing is you got to look at the market segment that they're in. The reason I picked companies like Mimecast, SailPoint, and CyberArk was in a pandemic that we had gone into 3 months ago. You knew email and email phishing attacks were going to go on the rise. So it puts Mimecast in a really good position, right? They're also cloud-based. You take CyberArk and SailPoint, which are on the identity side and privileged access side, knowing that identity plays a strong part of the protections in a remote workforce. Right. I felt those three companies were in a better position than maybe some of the others to succeed. And yes, they actually did pretty well. So I use a bunch of different variables when I think about it. Management team could matter, right? We've talked about Palo Alto, Paul, on Enterprise Security Weekly, right? You and I have had this conversation about if people just understood what Palo Alto was doing, right? If they
and they're really getting a little better at that too.
Yeah, if we understand what Prisma is, and we understand what Cortex is, and we understand what they're doing with these different acquisitions, and management's out touting kind of the future of where Palo Alto is going, Palo Alto might be in a way better position than they are in the public market.
Agreed.
So,
but the effectiveness, and Michael from the chat was commenting, right? Like the effectiveness of the product or how good the product is often independent of how the stock is performing, right? It is a factor, but not the only factor, right? Vice versa, they could financially be performing very well. That doesn't mean they make the best product on the planet for, enterprise security.
That is true. Look, sales and marketing is a lot of what drives the market in some respects from a valuation and a growth perspective.
Yep.
But at some point, the product has to perform or the growth rates can't continue, because if people start to abandon
at least some of the products have to perform, right? And that's when you get into these large publicly traded companies. There's more, I think in every single case, there's more than one product, right?
Yes. Well, there should be. They got to keep a revenue diversity. Think about Symantec before the Broadcom acquisition. They were struggling as a company. They really
you can have
were
too many products, which is apparently the case, right? Because they actually split the products into separate companies. I think they had a really big challenge between the consumer market and the enterprise market. Well, by selling the enterprise solution off to Broadcom, they got to double down the consumer side, and the Norton LifeLock product has actually outperformed the old Symantec stock because now they have a single focus on the consumer side to go after. It actually helped the Norton LifeLock side of the business, I think, by getting rid of the enterprise side. And often our advice, it's interesting, if you go back to the beginnings of a company, in a seed-funded company, our advice is oftentimes to focus on one problem, one solution on an aspect of it, right? And don't try and diversify too quickly, right? Gain your momentum, pick a lane that's going to be the fastest growth, right? And then start to diversify. That's usually our advice for most seed funding companies we meet with.
Yes. I mean, you have to build product market fit, and you have to build and establish revenue in a market segment. Over time, as a company matures, though, you have to start looking at other revenue streams to continue to grow the portfolio. But there are challenges in sometimes doing too much, in segmenting your customers and your market too much. And I think Symantec actually did aspects of that.
Right.
Palo Alto could fall into that trap, but I think what they're attempting to do with Prisma and Cortex is to really create additional revenue focus areas. But again, I'd like to see that story told better by Palo Alto than I currently hear it in the market.
And they've acquired companies in technology to round out that in a big way, to round out it. What we've done actually with some of our products is not necessarily new ones, right? But kind of variations on what we do with the core. So like there's different ways to basically have more things to sell potentially, right, without going off into new markets. And there's a big difference, right? Because there's a lot more risk associated with going off into a new market. Maybe it's a new buyer persona. That's risky. But if you're tuning your products internally, right, and just you're expanding your portfolio, but not necessarily stepping outside your swim lane, right, which is another company, ironically enough, that they're not publicly traded.
No, swim lane's not. But yes, I think the challenge for a lot of organizations as they grow is when you move into a new market, it could be a completely different buyer persona, one that you're not tapped into, which creates some struggles from a revenue generation standpoint. The closer you can stay to your persona buyers and sell them additional things, the easier it is to usually get that adjacency revenue. Absolutely. Okay, so let's go into the private side, right? So we cover funding announcements on Enterprise Security Weekly. I like to summarize them in this segment. And some of the sources that I use are a little behind. I think with the pandemic, some of my sources are a little behind. So I don't have as complete numbers as I would normally have in regular times. But here's some of the big funding announcements in Q2. ForgeRock took $93 million in a Series E. This is an identity play. Series E, $93 million. They've got a lot of money in. This is one company that probably at the verge of an IPO somewhere down the road. If the markets continue to stay strong, I think you could see a company like Atanium, a SentinelOne, a ForgeRock, who have taken big late rounds, getting ready to go IPO. Those are some of the ones that I would really see as kind of that next set of potential IPOs coming into the market. Cyberbit took $70 million. This was partially a buyout from Elbit Systems, which is an Israeli company, and part investment. It was recognized as a Series B because Elbit had put some money into Cyberbit. This kind of extended that funding, but also did some buyouts. It was an interesting deal. Aqua Security took $30 million in a Series D. They're also getting up there too. I mean, if you think about Aqua in the container security space, Layered Insights out, Twistlocks out. So Aqua's really the next big one, and Sysdig, both sitting there in the container security space, is those next two big companies. Orca Security took 25 in a Series A, and then Salt Security, who we know the Salt team pretty well, they took a 20 million Series A. So those were some of the big funding announcements in Q2. So there's still investment happening on the private side. I think it's slowed down a little bit, Paul, but you're still seeing some deals getting done, which is good. It's a good sign for our industry as people are still getting funded.
Awesome.
And then we had a few big acquisitions. DiviCloud by Rapid7, that puts them in the cloud space. I think that was a really interesting acquisition by Rapid7. CloudNeedy got acquired by Zscaler. So you see two kind of cloud security posture management companies get acquired last quarter to public companies to expand their portfolio. Cloud security is a big piece. We'll cover that in the articles next. It's one of the big shifts in cybersecurity for 2020 is cloud security, and you see some interesting acquisitions there. CyberArk bought Idaptive, which we also covered on ESW, and then our good friends Peter Smith and the Edgewise team was also acquired by Zscaler. So Zscaler did something interesting last quarter. They acquired two of our sponsors.
Right. I don't know that's ever happened.
No, not in one company.
Single company has not bought two of our sponsors.
Yeah.
It's interesting.
I thought that was really interesting. Absolutely. Let's see what else. Oh, I always try to identify a couple hot startups, Paul. And as you know, we've got, I think both of these will come on as sponsors. Secure Circle on the data security side. They are coming on. They should be on later this month. A really interesting startup in unstructured data security. You and I are really impressed with their technology.
Oh, yeah.
There'll be more coming with the Secure Circle folks soon. And then a good friend of ours, previously with Javelin, is over at Vicarious. I think they're doing some really interesting stuff there. I'm hoping they come over as well. But
those are really Matt and I's too. I mean, we've met since RSA dozens of companies evaluated. Many of those companies got to meet with us, sometimes more than once. And those are really the two that came out of our string of, kind of meetings and evaluations as Matt and I's top picks.
Yeah, and if we think about our success rate here, Paul, we brought some really, like the Cloud Needies, the Javelins, the Layered Insights that have come on to be sponsors, all have successful paths to exits. These are probably two other ones that hopefully follow the same path. Yeah.
Agreed.
Awesome. Any other questions from Discord that I should answer while we're in this segment? Okay. Good. Then that will wrap this segment. We'll take a quick break and then cover the leadership and communications articles for this week.